So what I just passed out to you is an assignment. So this is like, we had kind of talked when we looked at the ethics piece last chapter, and I kind of made a suggestion or hinted at the fact we'd be doing something like this. So this first sheet is just a description of kind of what you're going to be doing. So again, you're going to research and present, 4 to 6 minute kind of range, like it doesn't have to be a long time. A presentation on a major financial crime or scandal. The goal is to explore what happened, how it was discovered, who was involved, and had, what accounting lessons can be learned from it. So you're going down through, your presentation again should include the background, the company or people involved, description of the scandal or the crime, how the fraud was executed, the discovery and the consequences, accounting or ethical lessons learned. Should include some kind of visual aid, whether that's like a couple of PowerPoint slides to go with it, or a poster, or whatever. And then like your citations, there should be a slide or something that has a list of the sources you used. And the rubric that I'm using to grade there's below. So accuracy is 15 points, organization and clarity is 10, visuals 5, presentation skills 5, critical thinking 10. That means essentially connections to ethical and accounting lessons, so like that part of it. Citations, at least 2 credible sources for 50 total points. The second sheet, I assigned like each person in class a topic. So if you look at the second sheet, it has, you find your last name next to the topic there that you're assigned. So rather than having you guys have to search anything, I found a list of topics that should be easy to locate information on, and assign like everybody something. And ideally, this would be my order of presentation as well. So the order that's listed here will be the order that you guys will present in. So Cameron, who's not here, is the first one up, followed by Ben, followed by down the line.
What is this do, you said?
What do you guys, like, obviously I don't want to do anything next week. Like, forget that. It's the week after homecoming.
Yeah.
Okay, let's not start it next week either. Okay? So we'll do like 1 or 2 a day, 1 or 2 a class, starting that week after homecoming. So you have a lot of time to like pick away at this and get started, and we're not, everybody's not going on one day. So if you're at the end of the list, you have more time than the person at the people at the front of the list, but and I'll put something up on My Notre Dame, today or later today with, like the starting, like who will be the, when the presentations start. But it just, we'll do 1 or 2 a day because nobody wants to sit through 80 minutes of these things. Like, I don't want to do that either. So again, shouldn't be, like, it's not a big deal, but like, gives you a chance to learn about something kind of interesting, like a true crime scandal-y kind of thing. It's not a big, there's nothing you need to turn into me. So like, I don't need any papers. I don't need a copy of anything. You can just get up and talk about what you learned. I would have some notes prepared for myself, unless I, over the course of reading about this, just become a real expert and I can talk extreme, but some of these things are kind of complicated. It's like what happened and how the fraud was perpetrated. So I would suggest having some like notes written out or whatever for yourself, but anything visually wise that you need me to project, you should like send me an email, the day before or whatever that morning, so I can have it queued up and ready to go for you. But I don't need anything from you other than watching you do this thing. Everybody cool?
Yeah.
And again, like, you feel that's enough time, lead time on it, schedule these things on a week, or start doing these things on weeks where like we don't have something else absurd going on, and also there's a lot of distractions involved, so I'm happy to not start it that week as well. Okay. Let's dive into chapter 2. And I guess before I get started on this, you probably noticed, but I should mention that all the tests, you took the test in class, your scores graded and posted. Overall, I thought things went pretty well. And we'll just have a lot of comments other than like, I think the hardest section turned out to be the true-false section in general. I don't know if that changes your preparations going forward, but that seemed like the place where people lost the most points was the true-false section. That's not surprising to me. Because it's like, like applied vocabulary is basically what that was. So even if you had the vocab pretty memorized, like using it in context is harder than just memorizing the definition. So, everybody cool? Okay. Looking at chapter 2, I've looked at the test already. I think there's 27 or something vocab terms in chapter 1. I think there's like 10 in chapter 2. So like the vocab is a little less overwhelming, which is nice. All right. So chapter 2, we're going to continue kind of talking about this accounting equation and kind of building that into a framework that can work, or that we can use in like a more complicated situation where we might have multiple people that we're buying and selling things to, or we have multiple accounts to track, where the accounting equation would become like, like you have to roll out a roll of paper as long as the room to have space to have like your left-hand side and your right-hand side, where it just becomes infeasible to try to record information that way. That's kind of what we're going to be building towards. How do we create a method of tracking this financial information that's feasible on like, using sheets of paper that look like this, like the kind of the world that we operate in. So in general, in section 1, we're going to be introducing the concept of a T account. So the objectives, the things we want to make sure we know at the end of this is relationship between the accounting equation, assets equals liability plus equity, and that T account. Be able to identify the debit and credit side, the increase and decrease side, and the balance side of various accounts. And again, none of that's going to mean anything to you right now, and that's okay. And then be able to restate and apply the 2 rules that are associated with the increase side of an account. Again, those are the things to kind of look for as we go through and discuss this. So, the accounting equation. You remember this, that assets equals liabilities plus owner's equity. That's like the big idea from chapter 1. So when we talk about the term account, so an account is a record summarizing all the information affecting a single item in the accounting equation. So that single item could be supplies. It could be accounts receivable from business A. It could be owner's equity. All of those things would classify as an account. Cash would classify as an account. So continuing on, an accounting device used to analyze transactions is called a T account. T for transaction. And it also, from like the visual you'll see in a minute, Debit is the amount recorded on the left-hand side of the account, and a credit is the amount recorded on the right-hand side of the account. So going forward, the ability to identify credits and debits is a really important skill. Like if you can't get that straight, things get real messy real quick. While it's not a difficult concept, it is something that I want to make sure that we're being purposeful about making sure we understand, right? Highlight that this is something that really matters, no matter going forward. So we don't want to just yada, yada, yada it. So if I update my T account, we say the left-hand side is the debit side, the right-hand side is the credit side. I mean, it's like a toddler's letter T, but it's an awfully big top bar, but okay, that's about the right shape. So let's talk about increases and decreases, and calculating account balances. So some important concepts. Assets, that was the left-hand side of the accounting equation. An increase on the left side or debit side of the account is going to indicate a gain in asset, right? If you talk about the liability and owner's equity or the owner's capital account, that's going to be the right-hand side of the equation. And an increase on the right-hand side or the credit side of the account is going to indicate acquiring more liabilities, or it could be acquiring more equity. For each account, we have something called a normal balance. So the side of the account that is increased is called the normal balance of the account. So if I'm talking about the account of cash, I'll have a credit debit side of cash. When cash is increased, that's the normal balance side. Here's the confusing part. If I'm talking about a liability account, like accounts payable, an increase on the account side is going to indicate more debt in the company, right? So it matters what you're talking about. It's not just increase and decrease in value or increase and decrease in money. Oh, no. We're talking about the increase and decrease in the account itself. Some of the accounts of increase means more debt and decrease of value for your company, and some places the increase means more asset, like more value in your company. Really important that you make that distinction. Is everybody okay? So we say that assets have normal debit balances, in meaning that acquiring assets makes the value of the company go up. Liabilities and owner's capital have normal credit balances, meaning that increases there can do, or increases to those things cause a decrease in value, right? Just like we talked about. So to kind of highlight this, normal balance side of any asset account is the debit side. The normal balance side of any liability or capital account is the credit side. So again, this is a great picture to kind of keep in mind while thinking through this. And again, as we go deeper through this chapter and we start building this out, some of this, like why we're doing it this way, is going to start falling into place. It's hard to see the whole, the whole forest. We haven't made it out yet. We're still kind of in amongst the trees here. But this will start making more sense as we fill in this process as the chapter goes on. So can you draw the accounting equation on a T account? We're just doing that, right? So the accounting equation is just assets equals liabilities plus owner's equity. The T account is that T with the left-hand side and the right-hand side, a debit and credit side, right? That's all they're talking about here. What are the two accounting rules that explain increases of account balances? Assets on the left. Therefore, assets increase on the debit side of an account. And then liabilities and owner's capitals are on the right. So they increase on the credit side of the account. So where to go? Zoom that a little bit, I think. All right. Everybody needs one of these now. And look at how smart I got this time. Notice what I did. It's a packet now. We don't have to staple them ourselves. I was prepared this time. Since it's become abundantly clear to me, this process of getting access to the online version of this is going to be some minutes. So
That's my
get organized.
top budget.
I think the budget is on there. No way.
Okay. So, if you look at your work together, this is all in reference to page 35 in your textbook if you want to look on your own, or I have page 35, the part that we're looking at least projected here on the screen. So it says, write the answers to the following problems. Your instructor will guide you through the following examples. So if you look here, we have listed 1, 2, 3, 4, 5, 6, 7 accounts. On your sheet of paper, how many T accounts if you listed 7. So above each one of those, like on the top bar of the T, you're gonna write the account name. So like cash, and then accounts receivable, Sullivan Company, and then supplies. And we're just gonna go down and do that.
You said at the bottom? On the bottom.
On top of the bar. So it's like the title for that little grid. So I'll give you a minute to write those in. You do great. So just labeling them was the step 1, right? You label the account and you draw the T. That was step 1. What we just did.
We label them with cash.
So the titles would be cash, and the next one would be like accounts receivable, Sullivan Company.
Okay.
And the next T would be supplies.
Yeah, I was just confused because I thought company was a separate.
So when you think about the accounting equation, you have like all these different columns in it, right? Each one of these columns is going to be its own T account. That's what you're doing, is you're taking each of the columns from your accounting equation, having its own T account then to it. Step 2 says label the credit and debit sides. The debit side is the left, the credit side is the right. So once you've got all them labeled, inside your T, the left side you call debit side, the right side you call credit side. Debit, credit. Oh, not the arrows. Not the arrows yet. That's step 3. So debit, credit, debit, credit, debit, credit. We're just labeling the left side and right sides. The title for the account goes on top. It's like cash go there. And accounts receivable, Sullivan go there. Formatting. Making sure. Okay. So 3 says draw an up arrow on the increase side. So for cash, an increase of cash, because it's an asset, is it debit or credit? Debit. Okay.
So you draw an up arrow.
So you just draw an up arrow on the side that says debit under cash.
You wouldn't do a down arrow.
Well, read 4. We're going to do that in a second, but we're just doing it step by step.
Yeah, what confuses me is how those correlate exactly. Like, how does it?
We're going to get it when we get there. We're going to get there. Okay. Right now, it's about making sure you're putting things in the right place.
All right.
It's kind of what we're trying to learn right now. Like when you get a list of transactions, like how are you going to make sure you put the numbers in the right spot once we ditch doing like the accounting equation? Is it getting too wide and potentially too long?
Yeah.
All right. The next one, accounts receivable. Is that an asset or a liability or an equity? That's an asset, right? Accounts receivable is stuff, money people owe you. So which side is the increase?
Credit.
Debit. Debit. The next one was supplies. What is a supply? Asset, liability, equity? Asset. So which side does the up arrow go?
Debit.
Debit. Prepaid insurance, what's that? It's an asset, so which side is the up arrow? Debit. Accounts payable is an asset, liability, equity, liability. That's money you owe, right? Accounts payable, the payable means you have to. So which side is the up arrow side? Credit. Accounts payable, credit side is the up arrow. Parker Vogel Capital, that's the equity account. Credit is the increase side, so the up arrow goes on the credit side.
And what cases would be?
Grape down the wrong pipe here. One moment. I'm not dying, I'm just getting really red. It's okay. I can breathe. Nobody called it. Make an emergency out of this. Okay. Sorry, Gavin, you had a question.
What cases would be?
To what account? Yeah. Yeah, so step 4 says draw an arrow on the decrease side. So obviously the other side of each of those is going to get a down arrow, right?
Yeah, that's what I get confused.
So think about if cash goes up, it means you've received money in.
Yeah.
That's a debit, right? If accounts payable goes up, that means money's come out. That's a credit.
Yeah, so in this equation, you're automatically paying the credit in a sense. Like, because like, you understand what I'm saying? Like,
I don't think so.
okay, so what I'm trying to say is like, you get money in your debit, okay? Like,
Get money.
like in the debit account.
So a debit is part of an account is cash, supplies, prepaid insurance.
Yes, exactly.
So if you receive a debit to an account,
Yeah.
that could be money coming into your business or money going out of your business. It's not clear what's happening until you know what side of the accounting equation that account corresponds to. Because a debit in cash means money came in. A debit to a liability means debt goes up.
Yeah, that makes sense. I was just thinking about like a credit card standpoint.
Yeah.
That wasn't working.
No. We like, just like in, like in math where we talk about like the real numbers, but real has a different meaning than like the English word real. Same thing here, like accounting, debit and credit,
Yeah.
totally different meanings than like what the common vernacular is.
That was
Like,
lost. for a
yeah.
second.
So that's an important point, Joe, is that like we need to make sure that when we're in the talking accounting world, debit and credit have very specific meanings in the accounting world that are not the same meanings that they have in like, John Q. Public. Right? Does that feel better?
Yeah.
Okay. And then part 5 says label the normal balance side. So which side is the normal balance? The side with the up arrows, right? So any side with the up arrows, for each one of them, I'm going to go in and write underneath it normal balance.
And normal balance means
The side that increases.
for
Yep. So just like last chapter in section 1, when we're dealing with like the kinds of questions that you guys had to do in section 1 of chapter 1, it was just like putting the pluses and minuses in the different parts of the accounting equation, right? Same idea here. We're just learning where to put stuff, like what stuff is going, what stuff means up and what stuff means down, basically.
I think this is for your next hour.
Oh, yup, it's not for this one.
Okay.
You're welcome. All right. Everybody feel good on their work together? Paige?
Yeah.
All right. Once you turn the corner then to the on your own. Oh boy, I just moved way too many pages there. I know. Go away. Go. No, I don't want to do that. Just get out of my way so I can. Ugh. I want to be able to use the scroll bar. If you guys bear with me for a moment while I fight with my computer, I'll get you guys to the problem here.
I didn't see it at the bottom. I thought it was 6. I missed it, bro. My hand was open.
There, we finally found you. Okay. So lock in. Here's the problem for the on your own. So your accounts are cash, accounts receivable, White Company, accounts receivable, Jagerstrom, or probably Jagerstrom Incorporated, supplies, prepaid insurance, accounts payable, West End Hardware, and then Shelley Feinstein Capital. And then you're doing the same thing that you did on the work together. So the sub-skill that you need in basically to do this is to be able to identify from the names of these accounts whether they are assets, liability, or equities, right? If you can do that, everything else should be pretty straightforward on what to do.
It might be helpful to add notes out. It might be helpful to back it out. So we're gonna be take a minute or two.
No, it won't be that. Yeah. That's what I want. Oh.
Yeah, it's the exact same problem, it just different names for the accounts, and the accounts types are like scrambled in different order, but same exact problem.
Detailed cash flow.
Yeah.
Whatever it says accounts. Whatever it says accounts.
No.
You write it on the
Receivable to credit.
Most of this is already reviewed other days. Why does it get
You guys ready to read through some solutions here? Okay. Your first account was cash, debit on the left, credit on the right, up on the right, up on the left, down on the right, normal balance on the left.
Could I go to that?
Yes. Your second account, accounts receivable, what company? Debit on left, credit on right, up on left, down on right, normal balance on left. Next one, accounts receivable, Jagerstrom. Debit on left, credit on right, up on left, down on right, normal balance on left. Supplies, debit left, credit right, up left, down right, normal balance left. Prepaid insurance, debit left, credit right, up left, down right, normal balance left. Accounts payable, West End Hardware, debit left, credit right, down left, up right, normal balance right. Shelley Feinstein Capital, debit left, credit right, down left, up right, normal balance right. Any questions on those guys? Relatively straightforward. On to page 52 then. 17. Yes.
For now, please.
Okay. So, again, this is referenced to page 52 in your textbook if you're following along. The directions here say, write the answers for the following problem in the working papers. And you're given like this grid to fill in that's labeled. The first one I think is done for you, right?
Yeah.
Okay, so it says cash is the first one. We classify that as either asset, liability, or equity. It's an asset. The increase side is on the debit because it's an asset class. The decrease side is on the credit. And the normal account balance is on the increase side, so the debit side.
Mr. Cool, do you want us to do only 2.1 or 2.2?
You only have the sheets for 2.1.
Okay, I was just saying, 'cause there's a lot of, like, space.
Yeah, no, it's just, I think they just have one sheet that they made, and they probably use it in a bunch of places. So it's beyond what you need to finish 2.1.
Yeah.
Okay? So again, go ahead and,
I got a rock.
work through this, and then I'll read through solutions at the end. So go ahead and try this on your own. We'll read through solutions. It's basically the same thing as the previous worksheet. It's just formatted differently, right? Instead of drawing these little T's, we have this in like a grid.
I'll only do this side.
Right, so we have a mix.
Those are liabilities.
So,
And then equity. Owner's equity.
Owner's equity is the asset class, sure. So in the next section, kind of continue doing the same, I'm dealing with the same structure. We're just gonna add, in the problems, we'll add like numbers, making sure we're putting like numbers in the right place rather than just like up and down arrows. And then in the third section, we're like kind of putting it together into a process. Yeah.
Oh,
the social charge.
Yeah, go ahead. Yeah, that's fine.
Is
It's accounts receivable, child.
You can like abbreviate accounts like ACCT and receivable and REC.
We're like, can I write AR, Tyler Joe, everything on it?
It's probably
How is that?
I mean, there's only so much space there,
If the
right?
company was to fail, they'd have to pay out that.
Okay, that makes sense. Mr. Core,
Yes, sure.
capital's labeled equity, correct?
Yeah,
Okay.
the capital account is the owner's equity account. I don't know if you needed something. You guys ready to read through the solutions here on this guy? Okay, here we go. I'm going to skip cash because it's already filled in for you. Second line should be accounts receivable, Tyler Choi. That's an asset. Increase side is the debit, so I put an up arrow underneath debit. Decrease side is the credit, so I put a down arrow under credit. And the normal balance is on the debit side, so I put a check mark there. Next one, account receivable, Nolan SB. That's an asset. So I put the up arrow under the debit on the increase side, and the down arrow underneath the credit on the decrease side, and the normal account balance is the debit. Supplies, that's an asset. So I put the up arrow under debit on the increase side, a down arrow under credit on the decrease side, and checked the debit on the normal accounts balance. Prepaid insurance is an asset. I put the up arrow under debit on the increase side and the down arrow under credit on the decrease side, and a check mark under debit for normal accounts balance. Accounts payable, Green Solutions, is a liability. So I put the up arrow under credit on the increase side and a down arrow under debit on the decrease side, and put a check mark under credit for normal balance. And then the last one, Georgianne Hamer Capital, is a owner's equity account. I put an up arrow under credit on the increase side, a down arrow under debit on the decrease side, and put a check mark under credit for normal account balance.
What's the account classification?
For the last one, owner's equity?
Yeah, no capital.
Yeah, that's the owner's equity account. Or just equity is fine. Any questions so far? Okay. Let's at least start 2-2. I don't think we'll get to going through all the worksheets or whatever, but that's fine. We can always save that for next time. We have so much time left. We got to do something here, right? So in section 2, we're going to restate and apply the 4 questions necessary to analyze transactions for starting a business into debit and credit parts. So the idea here is to start getting used to tracking these transactions with these T accounts is kind of what we're getting into. So, much like that last sheet that you guys just saw, we'll often be using a chart of accounts, which is kind of like what that last sheet you just looked at was, or really even like the sheets before it where you had all the T accounts. Each transaction changes the balances of at least 2 accounts. So for example, if you buy supplies, that's a credit to the cash account and a debit to your supply account. Everybody's okay with that idea? Just like we saw with the accounting equation. A list of accounts used by a business is called a chart of accounts. Yes, sure. So if you remember at the beginning of chapter 1, I pointed out like this little list of accounts for this hypothetical web services business, this Delgado Web Services. That was like our example account for the textbook when we're talking about like a single owner business. And I pointed this out, it was like at the very beginning, it was the very first page in chapter 1. Had this grid on there of a key. So this is a list of all their accounts. And they've numbered the accounts to make it easy to, to list them somewhere else, so you don't have to write out the entire account name. You can just say 210 or 220 instead of saying accounts payable Canyon office supplies. Jeepers creepers, can't we just abbreviate that? We do with the number 270. We've also classified the types of accounts into assets, liabilities, and owner's equity. And then we have revenue and expenses as a way to further analyze what's going on with our business. Everybody's okay? So again, this is just a list that we'll refer back to. It's like when you look at a map and it has like a list of all the abbreviations or something on there, like what all those symbols mean. It's like the key to reading it. So let's start looking at some of these transactions that we saw in chapter 1 and start looking at how to record them using a T account, right? Rather than just using the accounting equation. So the very first type of transaction we looked at was receiving cash from owner as an investment, right? In the accounting equation, that was plus 2,000 under cash and then plus 2,000 under equity, right? So notice that in our T equation then, under the cash, it's going in under the debit side as 2,000, and on the equity account, the capital account, it's going in on the credit side, because those are the sides for increase amounts. Everybody's okay? So again, the point of what we're doing here in this section is like taking these transactions that we saw that we recorded with the accounting equation in chapter 1, start learning how to now record them using these T accounts. So the next type of transaction we looked at was paying cash for supplies, which is exactly the example that I mentioned before. So you pay cash for supplies in the amount of $165. So that's a debit under supplies. I'm sorry, yeah, a debit under supplies is you gain the asset of supplies, and it's a credit under cash because you're losing that cash. Everybody's okay? Notice on each of these past two equations, one part of the transaction is a credit and the other part is a debit. It does not matter if they're on the same side of the accounting equation like we see here, or if they're on opposite sides of the accounting equation as we see here. The difference is that when they occur on opposite sides of the accounting equation, they both occur to the normal balance side or the non-normal balance side. When they occur on the same side of the accounting equation, they occur on, one is a normal balance side and the other is not. You guys see that here? So again, just like for the accounting equation, we're just like adding a layer onto this, right? So it's still the same ideas. We're just adding an extra like bookkeeping layer to this. Because at the end of the day, like when you actually run a business, you'll have, you know, possibly hundreds of account categories, and just like keeping that together on one sheet of paper is just not feasible, right? You need to break it up into like a book where you're flipping back and forth between the pages, recording these things, just from a bookkeeping standpoint. The next type of transaction we looked at in chapter 1 was paying cash for insurance. In this case, in the amount of $900. So what's going to happen to our T accounts? Cash will be credited, right? $900, that's a decrease. And the asset class of prepaid insurance will be a debit of $900 because it increases. Everybody okay? So the tricky part is like we're trying to get away from like up and down and start thinking about credit and debit. The tricky part is on the left-hand side, credit means up. And on the right-hand side, credit means, on the left-hand side, credit means up. But on the right-hand side, credit means down. Right? So they're like opposite directions. The next type of transaction we're talking about is buying supplies on account. So in the accounting equation, supplies side plus whatever, accounts payable side plus whatever, because you gain an asset, you gain a liability. So with a T account, the asset supplies is going to go debit or credit. Debit, $200 or $220. The asset class accounts payable Canyon Office Supplies will receive a credit because it's increasing $220.
So that's what you owe them?
Yes. Is everybody okay? And again, this is one of these things that's kind of hard to get straight. And if you can't get it straight now, it's going to cause problems over and over and over and over again. Remembering that debit is plus on the asset side, and credit is plus on the liability equity side. Got to get that straight. James. Sure. You guys see what I mean? Again, it's not complicated, but it's easy to get turned around on. I'm hammering it now so that we're mindful about it now, so it doesn't become like an ongoing problem. Paid cash on account, that's the next type of transaction. So when we did that, we have lose cash and lose liability when we did the accounting equation, right? So with T accounts, cash is going to receive a debit or credit. Credit, because it's going down. And the accounts payable is going to receive a credit because it's going up, right? Oops. No. Get back. Oh, we did that one. This is what I want. Oh, I'm sorry. We said, yeah, Luco was right? You said debit. Yes, I'm sorry. Debit because that liability is going down, right? Ugh. See how easy it is to get turned around? This is the thing, like, not hard, but we have to be careful. It helps to write it down. If I had it in front of me, the number would have gone in the right place. Me talking without seeing it, it's harder. Yeah, it's the same thing as the accounting equation, just making sure you're putting things in the right columns. So again, even if it's like initially, what you do is you just write like plus, minus, plus, next to credits and debits in your columns. Like if that makes it easier for you, just do that straight away. Like, okay, assets. Debit is plus, credit is minus. Liability. Debit is minus, credit is plus. Equity. Debit is minus, credit is plus. And like write that little minus and pluses next to your debit and credit columns. If that helps you, that's all we're saying. Is everybody good? So, the 4 questions. What account is affected, right? So like, is it supplies? Is it cash? Is it accounts receivable? What are the accounts that are being affected? What are the classifications of each account? Is it an asset or is it a liability or is it an equity? How is each classification changed? So is it a credit or a debit? And then entering the amount in the proper account. Everybody's okay with that? That's essentially what we did on those examples. When I buy supplies on account, what are the 2 accounts affected? Good. Supplies and accounts payable is correct. And that's it. What do we have? 15 minutes? Let's just stop. We'll start with the 2-2 handout. Next class, rather than getting into it and like not being able to finish it, let's just, because I'm going to collect it when you guys are done, just like I'm going to collect your 2-1 packet. So just pass those forward and I'll take those from you. I don't want to give you the 2-2 and not take it back from you the same day.
Yeah.
Because I tried to make you the promise that almost nothing you're going to do in here has to be done at home. Right? We'll just turn it into 2-1 packet. Which everybody should have done, basically, to the big plan. Absolutely. Sure. Sure.